What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we did see a pullback to critical support as we're going into many catalysts and big tech earnings in FOMC. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 1.18%, and we did come back down to that critical support zone at SPY 390, which if you've been following along, you know is our critical risk level of whether or not we're staying bullish on this trend or starting to get more risk off. Now keep in mind, if you go by closing prices on the SPY closing high to today's closing low, we have dropped 2.22%, which is very mild considering most pullbacks are anywhere between 1.5% to 3%. So while we may break down below 390 and continue to go lower than that, right now, we have only had a pullback after a breakout of 390 to retest that level as support. And if we do get a successful retest of this support level, the bulls have the all clear to completely start running back up to SPY 416 from here. So just keep that in mind, that while we are pulling back, it is all happening on decreasing volume. And if you look down here, price has been falling as volume is also tapering off. So there is absolutely no high volume selling behind this pullback. One of the easiest bear traps to spot is going to be low volume selling while you are in a bull trend, and we are currently in a bull trend of higher lows and higher highs, and we are currently seeing low volume selling and a pullback right back down to support. So just keep all of that in mind as you go through the rest of the week, because there are going to be plenty of catalysts and there will be plenty of volatility as a result of that. But you need to understand your risk levels, and you need to have a trading plan that goes around your risk levels and not just tries to react to news. So for that reason, I am still bullish while SPY is above 390 and ready to get more risk off of more downside if SPY starts breaking down below this support zone. That is how I view the market, and that is how I manage risk. And it really can be that simple. There is nothing that needs to be overly complicated about a trade plan. If SPY stays above 390, we can still go close the gap just above 401, possibly even push through that gap and start trending back up to the previous daily high right around 416 to even possibly even higher around 420 to 421. Now in the event SPY does break down below 390, we have that next critical support down there at 380, which is another $10 drop, so you will want to be aware of that. And below 380, we are getting a lot more bearish on this market because we are likely heading down to 350. So you have two extremely critical risk levels at 390 and 380. And I do suggest getting risk off below 390. That way you do not end up holding long positions for far too long, because if you wait until we break down below 380 and you are holding long from up here in the 390s, that is just way too much risk to take on, and it's just not worth it. Keep in mind, you can always get back in if we do get the bullish breakout, but if we lose support at 390 on SPY, we will instantly want to get more risk off. So just keep that in mind, because there will be plenty of noise this week. And remember, we have only pulled back 2.2% from the closing high, and there is going to be a lot of bears out there screaming, thinking the louder they scream, the more correct they're going to be. But nothing has changed on the chart in the last few days. We have simply pulled back to the breakout area. On the NASDAQ 100 triple Qs, we were down 1.96% as the triple Qs did lose that critical support zone at 296. So we instantly want to get more risk off in the triple Qs until we get through these big tech earnings and see if the triple Qs can get back over 296. Below 296, the 20 simple moving average comes into play, which is right there at 291.5. So that is going to be the next critical support zone if we do stay below 296. And the support trend line is down here right around 287. So I suggest staying risk off below 296, and we are going to see the next bear market leg lower below 287. So those are your most critical risk levels to pay attention to. Below 287, we'll be looking for that next leg lower at 258. So keep that in mind. If we do continue to trend lower, we are more than likely going to make that next leg lower in this bear market. Although we are still seeing this low volume sell off, so it's more than likely still just a pullback. As long as we have these higher lows and higher highs, you can stay on this bull if you choose to above 287. But below 287, I think there is little chance that this is still bullish, and we are very likely going much lower. Back above 296, we still need to break above the previous daily high at 307, and then we can reach higher price targets at 313 and 320. In the Dow Jones, we were down 0.76% today, and if you look at the Dow Jones from closing high to closing low, we have not even dropped a full 1%. So just keep that in mind, that the indices are merely pulling back after a few days of selling down to critical support, and there is no guarantee these bull trends are ending. The Dow Jones closed right on top of that critical support at the 50 EMA, so if we do continue to trend lower from here, the next critical support will be our support trend line at 315 and our 20 simple moving average at 313. Below that critical support, we're more than likely coming down to fill the gap at 307, so keep that in mind. You will want to get more risk off if we do lose this support zone. To the upside, we need to break the previous daily high at 321, and then we should fully close the gap at 323 and possibly even push to the previous daily high at 333. In the Russell 2000 IWM ETF, we were down 0.62%, and the Russell 2000 is still closing above the 50 EMA, and we still have the 5 EMA closing above the 50 EMA. So as you can tell, this low volume pullback has not done a lot of damage to the charts. We still have the higher lows and higher highs, and we are merely pulling back to critical support levels to test them as the breakout. So as long as IWM is above 175 to 176, I do believe the small caps are still developing a bull trend, with the next bullish price targeted at the gap close at 183.5 and the previous daily high at 191. If we lose support at 175, look for a retest of 170 and possibly start trending down for that next leg lower, but you will want to wait for the confirmation of the price action breaking through support before you just assume that. On the ARKK ETF, we were down 4.78% as ARKK did lose the critical support trend line, which was right there at 44.5. So I do believe ARKK is risk off while we are below 47 and breaking down through the support trend line, because ARKK is still in a bear market and we did not get the confirmation of the closes above the 47 and the retest of the breakout. We got the breakout, but on the retest, we sliced right through that level and it did not act as support. So far, this looks like a false breakout in ARKK and a failure at support, which more than likely means ARKK is not out of the bear market just yet. We need to wait for confirmation to close back over 47. On the VIX, we were up 5.7% as the VIX did close back over 24 today, and we do see the VIX starting to bounce. However, do keep in mind the VIX is still in a bear trend, and a bounce to a lower high is still going to keep the VIX in a downward trending channel, which means the VIX could still be trending down towards 20. For that reason, we only want to get more bearish if the VIX starts breaking out above 27, because anything in the VIX between 24 and 27 is very likely just a spike in volatility during this pullback. If the VIX elevates higher than 27, then it's more than likely part of the bear market next leg lower. So do keep that in mind that the VIX needs to get above 27. Otherwise, we are staying bullish on the next time the VIX closes below 24. On Bitcoin, we're currently down 2%, and Bitcoin did close below the breakout level at 22,000, which means it could be coming all the way back down to the breakout of the resistance trendline and the support zone right around 19,000. Bitcoin is still in this bear market while it struggles to break and close back over the 50 EMA, so I do not think you should be bullish on Bitcoin while it's below 22,000. At this point, you're either waiting for Bitcoin to get back above 22,000 or over the 50 EMA, which is right around 23,000, because this is still possibly just a lower high in the bear trend, and we could still see Bitcoin come down and slice through support and start trending down towards 12,000. So the risk is elevated in Bitcoin while it is below 22,000 and still in the bear trend. So the next buying opportunity on Bitcoin will be the support zone at 19,000, unless that level fails to hold as support and you'll be looking for the next bear market leg lower. On Nvidia stock, we were down 2.88% as Nvidia is continuing to trend down towards our support level at 161. And if that level fails to hold as support, you will see the gap close at 158. On Nvidia, it's better to be risk off while we're below the 50 EMA. So the next time we'll be getting more bullish on Nvidia stock will be when it gets back over 172. And then we'll be looking for a retest of the high at 181 and then a breakout of resistance at 183 to send us back up to 196. Overall, this is still a higher low, higher high, but we don't want to try to catch this falling knife until we see confirmation of support holding and then breaking back above resistance. If that gap was not there, it would be less likely that we need to be risk off for the downside, but we do have a gap at 158 that is still very likely going to get filled before we go any higher. On Tesla stock, we were down 3.57% as Tesla did come back down to the breakout level, which did hold as support at 775. But if that support level fails, we are very likely going to fully close the gap at 752. Remember, this is still a bullish breakout with a higher high after the higher low. So we do not expect Tesla to make a lower low. We expect to see Tesla making a higher low at support, bouncing and continuing into the bull trend. So there is a big difference in expectation now that we have the bull trend, because during the bull trend, we expect to see Tesla trending higher. It is just a matter of where this higher low is going to find support. So we could find support at 775, the gap close at 752, or the 20 simple moving average right around 730. Keep those targets in mind, because as long as we're heading lower, those are the support zones that you want to pay attention to. Upside resistance will be at $800, $839, and $863. On Apple stock, we were down 0.88%, as Apple is also seeing that 3-day pullback back down to the breakout level and support zone right around 150, and we are extremely close to having the full bull trend in Apple stock once this 20 simple moving average crosses above the 50 EMA. For that reason, there are only two critical support levels in Apple stock you need to pay attention to, and that is going to be 150 and 147. Below 147 is likely we are trending lower, so do keep that in mind. But so far, this looks like a bullish breakout and simply a pullback to retest the breakout as support before we go any higher. Upside price targets from here will be 157 and then 163. And keep in mind, we do have earnings right around the corner, which is going to be a catalyst for the next leg in this stock. On the financial sector, we were down 1.4% as the financial sector is pulling back to retest the breakout after getting rejected at the 50 EMA. The next time we break over that 50 EMA, we should close the gap above at 33.7. But while we are getting rejected, do keep in mind we could be retesting support to the downside or closing the gap to the downside at 30.8. In the industrials, we were down 0.54%, with the industrials continuing to close above all the moving averages, but still finding resistance at our resistance trend line. On the bullish breakout, look for the gap fill above. In the healthcare sector, we were up 0.51% as the healthcare sector continues into the full bull trend but still struggles to close above that resistance. With the full bull trend, it's more than likely we will break through that resistance, and the next price target above 131 will be up there at 134. On the energy sector, we were down 0.91% after getting rejected around the 50 EMA, even though we did not fully test that level as resistance. That could be close enough. Keep in mind, the energy sector is in a downtrend until we get back over the 50 EMA, and we do have a gap to fill to the downside at $69. So do keep that in mind. That is more than likely we are heading lower after the rejection from resistance. So jumping back over to the S&P 500, we are definitely at a very critical support level that is being tested with today's price action. And we do not have any confirmation with the price action whether or not we are going to bounce off this support zone or slice right through it. Remember, we are bullish on SPY while it is above 390, and it does not get any simpler than that. And we have only seen a 2.2% pullback from the closing high, and we already see bearish sentiment spiking and people losing their minds. This is just a pullback until we lose support, and then it's something more. So keep that in mind if you are following price action. There is still no confirmation that this bull trend is ending at this time. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.